Good afternoon, everyone. Ed Molesky here. Another crazy week in the financial world. Lots to talk about. The COVID crisis is coming back with a vengeance. We're seeing escalations in several hot spots. The United States yesterday had the most new cases ever reported. Not by much, but still, things are going in the wrong direction. Bars that were opening are now going to close. Disney World decided not to open. There's so much going on. It's hard. It's really difficult to keep track of everything. So you've got the Corona thing. You've got bad economic news. And yet the NASDAQ is very close, or is at all-time high this week. And you say, how can that be? Well, I think we got to talk to the people at the Fed and listen to this. Apparently, they've got a $2.3 trillion war chest to help the economy. And this may be hard for the viewers to believe, but I think they've only tapped into about 6 or 7% of that. In other words, I believe there's still over $2 trillion that's there available to help stimulate or help the unfortunate, the people that, their businesses are down, et cetera, et cetera. So, there's a saying, if you got a problem and you throw money at it and the problem goes away, that wasn't a problem in the first place. And that's what we seem to be seeing in these financial markets. Couple other things. Apparently the EU is threatening to stop allowing Americans into the EU. I don't know what's going to happen, but there's a lot of crazy things. Another thing about the markets that came out this week that I wasn't aware of. Every 3 months in these major financial markets, there's what they call triple witching, where all the derivatives and all the options and futures and everything expire and they roll over to the next. And I guess there's there's March, there's June, September, and December. Hope I got that right. Well, apparently for the last 25 years, after the September expiry, which expired not this week, but last week, you get and this is a seasonal thing that stood the test of, 20 to 25 years. Very few occasions is the market up over the next 6 weeks. So we got that sort of yoke weighing around our neck. It's wild. It's if you live long enough, you see amazing things. Interest rates are, the 10-year rate, 0.64. Gold, on the other hand, gold is glittering. Gold has done its job. We keep saying that. It's $17.80 an ounce. The futures got to about 16.05 or 6 right at the time when the market bottomed. So when the market bottomed, gold peaked, and now we're seemingly trying to get gold's looks like it's on another major move. And we'll look at some charts. Here we got the S&P 500. We're having trouble here, folks. We got the 3,200 versus 3,400 here, or 33 and change. Not quite, not that far apart. And now we seem to be breaking. Well, we've broken that trend. The big question is always going to be, with the Fed on the accelerator, money ends up in these monster companies, and the NASDAQ zooms higher. 1/3 of the S&P 500 is above its 200-day moving average. So that means that the money's focusing into the bigger and bigger companies. So now we got a 1-year chart of the NASDAQ. And as we saw with the S&P, it's still 5% below its high, but look at this NASDAQ. That was the high in March or late February, pre-COVID. And look at this. Clearly, 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 clearly. Although that we had a big spike here a couple weeks ago, and it looks like we got a couple red candles there. The market's acting like there's nothing going on to a large degree. Okay, so we're going to take a look at Facebook here. This is a 1-year chart. This is all-time high territory here prior to COVID-19. There's the swoon. Look, all-time highs. But today's candle, not good. Not good. Like, is this the beginning of a bad period for the company? Because two major advertisers have pulled their business, Unilever and Verizon. Okay, so we're going to look at a long-term chart of gold. We're going to look at the ETF. It tracks gold almost perfectly. But this is a long-term chart. This goes back 15 years. That was the peak there, 2011. It broke down. But look at that base. We've talked about this, but I think it's worth talking about. Gold is here. We're just a little bit, 100, 150 bucks away. So gold's done its job. Gold's done its job. Pasifino Gold. It was a shell not that long ago. They couldn't raise $300,000. Then they canceled that and raised $6 million. How does that happen? It moved here from 5 cents up to eventually, I think, 28, 29. And that happened very quickly. But look, bit overbought. So now we've pulled back and we're nicely at the other Bollinger Band. And my comment is, this is a company with $6 million bucks. They're going to do something, and I think it's going to be very dramatic because of the people involved. Next chart we have here is McDonald Mines Exploration, another junior. They're hitting gold. There's a number of shares free trading, but there's definitely an little upward trend here. And this only goes back a year. It's been up to 20 cents or so. But if you read some of the chat rooms on this company, they're pretty excited about the occurrence of visible gold more and more. So here's a 1-year chart of a company called QMX Gold. Yeah, we're down here at a nickel. This is back 8 months ago. No, not even that, 6, 7 months ago. It moves. There's a lot of stock. They've got unbelievable ownership here. There's some major, if you look it up, I think Eldorado Mines is just under a 20% shareholder. There's other companies involved, not to the same extent. They got a major land position, and they have $12 million, and they've just announced a $10 million exploration program. Okay. This could really heat up. There's a concern that Google, Facebook, and a couple others are sort of controlling the advertising of the world. Anyway, so Verizon's no longer going to advertise, and Unilever has come on. Now this may start a bit of a landslide here for Facebook. And Facebook, we're going to put up the chart later, is down substantially today, as is the market. We're going to leave it there until next week. Be cautious. Don't get sucked into things. If you've made some money, take the money.